Are you taking a reactive or proactive approach to your taxes? Do you wait until the year is over and hope for the best when tax time comes around? Is your business taking accurate tax deductions and receiving all the tax credits you deserve? Welcome to the Tax Answers Advisor with Marcelino Dodge. Today, we will answer these questions and many more, so sharpen your pencil and take some notes. Now, here is your host, Marcelino Dodge.
We wish you a very wonderful day and say welcome to the Tax Answers Advisor with Marcelino Dodge, show number 46. And we've just been really having a good ride and a good time at just accurately informing you and helping you to see, sometimes it's good to get a little extra help when you're doing your taxes. And in fact, even thinking about it, not just a tax time, but looking at it as a whole year of planning and activity, not just those 3 or 3.5 months to go in and get it done there. And certainly it's very important. And we really appreciate the fact that we've had a worldwide audience here, not just the US, areas like Brazil and Europe. It's great. And you can listen to us, of course, on various platforms. And that, of course, is iHeart or Spotify or Apple Podcasts. There's a number of places you can get us. Plus, if you're watching this on Facebook Live, that's where we broadcast as well. And if you're on my Cash Tracks Financial page there, we certainly invite you to please like the page, as well as keep in mind this video as we record this will also be posted to our YouTube page later on. And if you do go there, we certainly invite you to please subscribe to our page because we're continually putting on new content, new tax information, which is always great. And anything that comes up today, always invite you to give me a call here. It's 844-394-4287 because it is so important to just get to know everything or at least see if we can help you. And that's why we give everybody a free mutual exploration session just to see if what we can do can certainly help you to improve your business or your cash flow and also be able to help you to save on taxes, which is our ultimate goal with everything. And then, of course, our email success@cashtracksfinancial.com. Today, we're going to talk about taking some drastic action, again, trying to help you as a small business person to save on taxes and increase your income. I'm going to have our wonderful guest here, John Briggs, with us today, who's going to help us with this a little bit more. He runs Insight Tax and Accounting. He also is the author of A Profit First for Micro Gyms. He has been a gym owner, but currently also has an accounting firm. And he does a lot of gym clients, and that's kind of a specialty area, I would guess, since he focuses on that. And it's going to be interesting to learn about that. And through this, he's learned about achieving a highly profitable business that can be overwhelming. And a lot of business owners, that is overwhelming. And so he's learned that there's barriers and unknowns that owners are forced to deal with. And we can become, as entrepreneurs, we can become stressed out. We can become burned out. And we want to definitely get aside from that and figure out how we can get cash flow, get to the lifeblood of the business, stay healthy, and be more resilient. And so I always like a man on a mission, and John is a man on a mission to help entrepreneurs through his real work-life experience, help them not to get burned out, help them to increase cash flow, to have confidence in their choices, and really become financially resilient there. And I really like this. As a tax professional, I really like how John just goes away from the normal CPA culture out there where you're overworked, underpaid, you pay your dues and suffer while you're at it. That mentality that don't really work anymore. And I really always like individuals who work away from that and really try to have a healthy work-life balance, even during busy tax time. And certainly as professionals, we really need that. And what some don't understand is that sometimes ones can get burned out. And certainly we don't want to do that. And it's nice that John takes care of his team like that, which is what we try to do here at Cash Tracks Financials, take care of our team. I just want to say thanks and welcome to the program there, John. How is today going for you?
It's going great. Thanks for having me, Marcelino. I'm excited I love tax stuff. I don't know if people can see, but we also have a sensation here about the IRS. My shirt says, "Dear IRS, you suck. Warmest regards, everyone." Because you mentioned this about tax. I think it's awesome that you're providing a platform for people to figure out how to lower that, because a lot of people don't realize that you can pay less tax just by understanding what the rules are that have been created. And for most of us, that tax burden is probably our largest expense over our lifetime. And so it would do us well if we can figure out how to minimize it as much as possible.
Mm. Yes, definitely there, which is, like, as you mentioned, part of the reason I do this and part of the reason why I invite ones to join us for a free mutual exploration session. And so let's kind of jump right into this, John, and get your insights on some of these key areas here, such as what's the greatest challenge that business owners face concerning their finances here. So what's going on there?
I think the biggest challenge that these business owners are facing is trying to balance the sexy part of the business of like sales and like whether it's selling the product or selling the service with the necessity of managing their cash flow and actually looking at it. Very few people go into business to be accountants, yet it is an important function of business. And so how do they manage the side of the business they don't want to do, but we know is absolutely critical to their success? And so that's the challenge that we often like to approach with business owners, and helping them understand that you can implement a pretty easy cash flow system that everything takes work to set up, but once it's set up, it's pretty minimal time commitment, but it gives you the information you need as a business owner to really run your business the way you need to.
Mm-hmm. Mm-hmm. Yes. And so how do you find that they need to get that set up? What have you found helps ones to get that set up? Because as you mentioned, they don't go into business to be accountants. They're good at whatever they do, whatever that is.
Yeah. Having someone to help them stay accountable is probably the biggest factor that helps them become successful. Because there's lots of books out there on cash flow. And a lot of those books get purchased, but I guess statistically, last I heard, is about 60% of books that are purchased are never even opened. Because I think what happens is the reason they bought the book was like, oh, I need this. And then all the other stuff of business gets in the way, the fires they have to put out, I got to get more sales, that type of mentality. And they never bring in maybe an accountability partner or a professional to help them just walk them through the system so that they don't have to reinvent the wheel. They just need to follow action items. And I think that can help them drastically.
Mm-hmm, mm-hmm. And so does this, as we think about this and look at this, as far as what we're talking about too, is the fact that part of getting that flow is, of course, understanding their accounting system. They got a lot of options out there to try to use accounting system, why various companies and so on that claim, I'm just going to put out there, they claim to really be there for the self-employed and be there to help them to set it up themselves. But what's often have you seen the reality come up with that?
Oh, if we get a new client and they tell us either they or their spouse has been doing the books since the business has started, there's lots of problems in the accountings. Because what happens is these softwares make it very user-friendly to the extent that it's easy to put information in, but they don't necessarily do a good job letting the user know that what they're doing isn't following actual accounting rules, and could be inaccurate. And what happens, actually, if you are doing things inaccurately, you literally could be paying more in taxes because you have something maybe on the balance sheet, which doesn't show up the same way from a tax deduction standpoint like it would if it were on the profit and loss statement, which it should have been. Mm-hmm. So a lot of times the challenges that we're getting is people are comfortable using it because it's software, and nowadays a lot of people are comfortable with it, not necessarily using it the right way because the software doesn't give you an accounting background. It doesn't help you understand the rules. It just makes it super convenient for you to input information.
Yes, it really does. And see, too often, at least I've encountered this, is that when they use the do-it-yourself software and it isn't set up right, sometimes they, at least what I've seen, sometimes that they actually make more money than what they think because they pull up their profit and loss statement in the software, and because they got the wrong stuff going in there, it turns out that they didn't think they made that much money, but in reality, they actually did better than they thought. Then they're wondering, okay, why do I have to pay so much tax?
Right. Exactly. And we also see even on the flip side where their income could be higher than what it should be because maybe they got a loan
Mm-hmm.
and they accidentally are putting in the system as if it's income.
Mm-hmm.
And now they're really like, how do I even pay for this? There's no way I made that much money. So we've seen it on both ends of the spectrum for
Mm-hmm.
sure. Both ends of the spectrum result in not good cash flow management and not a good tax outcome. So I'm with you. I'm a strong proponent of people finding professionals to help them because let's be honest, not only are we talking about software, we're also talking about 76,000 pages of tax law. And if somebody's filing one tax return a year, doesn't really make them a very good expert compared to maybe a professional who's filing a few thousand tax returns a year. And so, yeah, I'm a big proponent, whether it's tax or
Mm-hmm.
any area of business, finding someone who can help you with whatever the need is. That's how I've always been successful and how I've grown my company is I've relied on others who know more than me.
Mm-hmm. Yes, and that's often a big challenge in educating clients that way, and even help them to try to come in and do something. It's because there is this whole do-it-yourself mentality out there for trying to do it, but yet, yes, help is always a great thing. And it can be and allow them to make more money. And that's one thing I've always communicated with them or try to communicate with them is saying, if I do this, it's going to cost you just X amount, but how long will it take you to go out and make that in what you do instead of having to deal with this? So anyway.
Yeah. We always say too, a good accounting professional or tax professional is an investment. And we can save clients more in taxes than what they pay us in our fees. Sometimes that we literally are freeing up the 3 weekends it's going to take them to do their own taxes so that they could use that time to do something else in their life, whether that's generate revenue or just enjoy their outside of work time. Or we can usually find credits or deductions that they just didn't realize are at their disposal.
Yes, definitely there. So as we move a little bit here into more specifically into tax, so what have you found is one of the most damaging myths surrounding taxes?
That the IRS is correct. Look,
Yes,
the IRS is basically the police of the tax law, but the IRS does not create the tax law. The tax law is created by Congress, and then, in fact. So you have the Congress who creates it, and then you have the courts that defend it. The middleman in between that is the IRS. So just because you get a letter from the IRS that says maybe you owe more money or you did something wrong, they're not always correct. And a lot of times people don't realize that an IRS agent is usually trained on process and procedures of how the IRS wants them to work, but they don't necessarily get trained on actual tax laws. And so we come across auditors all the time that they're misinterpreting the tax code. And it certainly does take conversations back and forth before we can finally get them on the same page, because they definitely don't want to admit that they are wrong. But just because you get an IRS letter, do not automatically cut a check for whatever dollar amount they're saying you owe them. Review it, like have someone help you look at what the letter's saying, look at what you actually filed or whatever the letter is referring to.
Yes.
Because I think a lot of taxpayers need to get that. And it can be terrifying because there's this stigma of who the IRS is. And they certainly have the ability to put you in jail. You can ask Wesley Snipes that. Famous actor who claimed he didn't owe taxes and actually spent time in prison over it. So they can't do that. So we don't want to mess with them in that sense, but it doesn't mean that they're always correct.
Okay. Yeah, that's definitely true. Because you've encountered it. I've encountered it at times. Yeah, they get this notice in, client brings it in. And of course, whenever they get a notice from the IRS, they always assume that we made the mistake.
Yeah, sure.
Well, you did something wrong. I got this. Well, we can. Not saying we're perfect, but we can. But vast majority of the time, it's something the IRS just got. All they do is they take matching they take the information that they get from income sources, and then they always prepare something to their advantage.
To their advantage, exactly. They interpret everything to their advantage. And you're also talking about not everything is done electronically. They have employees, and shocker, sometimes those employees don't process things the correct way. Sometimes they enter numbers wrong. Sometimes they don't scan the tax return the correct way. And so, yeah, there's a whole big gap of areas where there could be mistakes made on the IRS side.
Yeah. Yeah. And that's why whenever, I mean, of course, you do it with your clients and I do it with mine. I always say, you ever get a notice, you bring it in. You just don't pay the check, because we got to see what's actually going on, do the research, compare that with our records. And yes, there are errors that are found, and we always explain it. And at least when you send it to them and try to explain it, you may have to go back and forth a few times, but sometimes you can get it fixed. And once you explain and show the documentation to them, which is always tough, you got to have the documentation to show that this is correct.
Yeah, and we've had to open up like tax rules. Like we're quoting back to them their code section. We're showing them the rev rulings, which is, if people aren't familiar, it's like you have the tax code, and then the courts sometimes rule on it and give you further clarification, which becomes law. And so we've had to show them, like, this is what you're holding me to, and this is how you're saying it. But look, in bold writing, like right here, like it basically says you're wrong. Oh. They don't love that, but to your point, it does take usually multiple communications, and when we send off a letter, especially now post the pandemic, I mean, we're talking months before that gets processed and we hear anything back.
Yeah, because they're just not opening the mail. I mean, we heard the reports of how many truckloads of mail they had that was unopened when they closed down during the pandemic. So, and they're still getting caught up. Millions of tax returns, even from 2020 and 2019, still waiting to be processed. I mean, even electronically filed ones.
Yeah.
Just imagine.
The last I heard in July, they were like 8.5 million business returns backlogged.
Yeah.
Backlogged.
Yeah.
That's crazy.
That is crazy there. So then, aside from the IRS and other things, let's come back to our business owners. So what have you found ways that business owners leave money on the table, that is year after year?
Yeah. So usually it starts with the mindset, and I'll get into some specifics, but because most business owners aren't reading the tax code and maybe not either working with a professional at all or someone who might be like really, really inexpensive and inexperienced, they're not always getting the best tax advice. And because of that, they approach things from a very conservative standpoint. I have found that there is a large percentage of accountants in the industry that really make you feel like they're government employees as opposed to working for the client, right? They always come back with, no, you can't do that. And mainly because they don't want to have a conversation with the IRS if they needed to. That's not healthy, for the record. Like the tax code is 76,000 pages, which means there's a lot of exceptions upon exceptions. And you want someone who's willing to take a stance that's going to save you money, but they know that they can defend if needed. So with that being said, usually this mindset shift helps people. If you're thinking about your business and you're spending money, and that dollar is somehow related to your business in any form, shape, or fashion, there's a strong likelihood that is a tax deduction. And that alone helps business owners. They're like, oh, now they start thinking about the money that they're spending, and they're realizing, oh, I did do that for my business. And I did purchase this for my business. Things that they wouldn't have thought of ahead of time. So that's a general topic. Specifically, mileage is a big one. Business owners drive a lot. And if you're driving anywhere for business, it doesn't have to be just solely to meet a client. It could be driving to meet with someone you're networking with. It could be driving somewhere to research maybe a competitor or a different area. Maybe you want to move locations. You could be driving somewhere to purchase something that will eventually be a business write-off. I mean, So miles are often left off. Miles are often not claimed to the extent they could be.
Mm-hmm.
And that's a free tax deduction if you think about it. Like you're already
Mm-hmm.
putting gas in your car,
Mm-hmm.
and this is a non-cash tax deduction. So you want to make sure you're capturing every possible mile.
Mm-hmm.
Another area where business owners leave money on the table is with their travel. If you structure any trip that you take, even if you think it's initially personal, there are ways to do it so that it's actually a business trip. Now, I'm not saying you're going to be able to write off 100% of your travel or every trip you take is 100%, but there's possibilities that even if you're going on a personal trip, that part of that trip could be business, and therefore some of the expenses could be written off. So lots of people, I feel like, leave travel on the table. And then, there's cell phones. Some people
Mm-hmm.
don't claim their cell phone the way they should. If
Mm-hmm.
you're doing research at home, I think home internet is another area that they could look at. And then here's a big one for business owners, and this is it's a great tax strategy. So if you're a business owner, this will save you $3,000 to $6,000 in taxes. A lot of people call it the Augusta rule. We call it corporate rent, but we refer to it as the Augusta rule and describing it. So a little bit of a background, if you're not familiar, the PGA Tour every year has the Masters tournament, which is a very, very big, prestigious tournament,
Mm-hmm.
and it's held in Augusta, Georgia. Well, so during that time period, the town size of Augusta triples, and you have, multiple hundreds of thousands of extra people coming in for this 14-week period, setting it up. People come, like spectators come to watch it, and then they turn it down, or they shut it down and clean it up. So during this time period, these wealthy homeowners who have very nice homes are like,
Mm-hmm.
hey, let's make some money and rent out our houses.
Mm-hmm.
But I'm only renting my house out for a short amount of time. So like, maybe I don't really want it to be a rental, but it's my house. And so there's this tax rule. It's section 280A, in case anyone's wondering.
Mm-hmm.
And G2 is the specific tax code that I'm referring to. But basically, the rental rule is if I rent a property out for more than 14 days during the year,
Mm-hmm.
that the 15th day classifies it as a rental activity based on tax code.
Mm-hmm.
But what is overlooked is that anything less than 15 days, so 14 days or less,
Mm-hmm.
it's not classified as a rental property per tax law. So if I'm living in Augusta and I rent out this house, I rent it for 10 days, all the rental income that I get is not determined to be rental income per the law, which means I don't have to claim it anywhere.
Mm-hmm.
And so that was a fun way for the people in Augusta to maybe get around taxes. Well, we just take these rules that really wealthy people pay lobbyists to get into the tax system, and we take advantage of it ourselves. So we have the small business owner who
Mm-hmm.
should be having a monthly board meeting anyways, even if they're the only member of their board.
Mm-hmm.
They should be having a monthly company meetings. Why not have it at your house? So once a month, you're going to rent your house to yourself to hold a board meeting. That's a tax deduction for your business, a rent expense. And because you're doing it for less than 12, or you're doing it 12 times during the year, you are not required to claim the rental income on that. And so we recommend people, when it comes to like, well, how much can I rent my house for? We do recommend you do some research and maybe find like a VRBO site and
Mm-hmm.
find a house equivalent to your house in your area and see what a nightly rental cost is. That would be the dollar amount that would be safe to use. We have found on average $1,250 has been, it's usually around $1,250 for the use, because you're not only talking about the use of the property, you're also talking about full catering services, including utensils, which hotels charge extra for.
Mm-hmm.
So they set the precedent that I can write that off. Multimedia equipment, which can be rented, which hotels charge extra for.
Mhm.
And so you think about all the extra amenities that your house has that if you were to rent the same stuff at a hotel or a convention center, things like that, you would be paying extra for that. So again, $1,250. So if you do the math, what we're doing is we're creating a $15,000 rent expense on your business that really went to your personal account, and you don't have to pick up that $15,000 of rental
Mhm.
income.
Mhm.
That is a big area that business owners leave money on the table.
Okay, that's a very good thought there. Hadn't quite considered that of that 14 days rental. That's a very interesting application of that. So in a very good way to use that there, so that we don't leave that money on the table as business owners, but be able to use that little trick in there. But still, that's where still having a tax professional come in and help you to make sure you
Yeah.
apply that correctly. And if you're doing a board meeting, one of the things that they talk about is probably even have that in your board meeting minutes, these kind of things, is to have the documentation there to support that, to support all of that in the event of the audit there. So just don't go do it. We're not saying just go do it. You need an idea maybe you can present to your tax professional, but yet, or basically call John or myself. We can certainly help you work that out as well to make sure you do it right, but not leave that money on the table. Definitely there. So that's good. So, okay. So as we continue through here, any other way they're leaving money on the table, another thought, or is that?
I think I hit all the ones that normally come up.
Okay. Great. Oh, I wanted to ask you about the mileage here, because I have an issue with this, and see what suggestions you have as far as helping people to keep a mileage log. That's usually the biggest issue with mileage, is helping them to keep a mileage log.
Yeah. So this isn't the news they want to hear. Regardless of how you claim your vehicle as a tax deduction, you have to have a mileage log if it's going to survive an audit. So the way I say that, some people may, especially for business owners, there's two ways the IRS lets you take your vehicle expense. I could write off my actual expenses, gas, repairs, oil changes, interest expense if I'm purchasing the car. I can claim all those, or they try to simplify it and say, well, you can just take the standard rate for this year, whatever it is, maybe it's 58.5 cents per mile, and you multiply that by your miles. Well, they also say, well, if you're going to claim actual expenses, we have to know what your business use percentage of the vehicle is. Because as you already said earlier, Marcelino, they're always going to do things in their favor. So they assume you're driving your car for personal reasons to some extent, and they want proof. And so the only way to prove business use is with mileage, right? Because then it's like, I drove 15,000 business miles and I drove 2,000 personal miles. So I can claim 97% or whatever the math works out to be. We have had some of our clients, they've liked an app called Mile IQ. The last I looked at it, there is a cost to that, and I would be willing to bet there's plenty of mile apps that exist out there. But what they liked about it was it picks up when you're in your car and when you're driving, and then it kind of just says, okay, this last trip was 5 miles, swipe right if it was for business, or swipe left if it was for personal. And then you go into their system and print off a report at the end of the year. That's a way that some people have found it to be convenient. I personally am a little old school when it comes to my mileage log. I have a piece of paper in my car, and in January every year I print it off, and it has the date and a dash, like a line next to it. So it's a paper that has all 365 days in the year. And when I get in the car the next morning and I'm buckling my seatbelt, I look at my odometer, and it tells me how many miles I drove the previous day. I write that down on my line, and then I reset my odometer. So then every morning when I get into my car, I see how many business miles I drove the day before. Now I'm married, and so my wife does all the personal driving stuff, going to grocery stores and everything. I literally use my car to drive to work or goes to business appointments and come home. We use her car because it's bigger to, taxi our children around. So if you do put personal miles on your car, maybe you would just have 2 dashes, and you would still, my method could work. And I tell people it's kind of like brushing your teeth. There's nothing natural about the habit of brushing your teeth, yet most of us do it. this is just one of those habits that can become natural. It might take a few months before you like every day you're like, oh yeah, I'm doing this. But I think it's an easy habit. It only adds 10 seconds a day to my, time. Buckle my seatbelt, look, write it down, reset. I'm good to go.
Yes. No, that's great to know whatever method, but we got to help them find some method. You got to find some method to track your mileage there. That way, you just got to do it because as well as even having, I've been a lot of classes I've attended have suggested even having third-party verification, like of the mileage, like if you have your oil changed or whatever, make sure you got that documentation as well, because they usually record the mileage. To kind of.
Yeah. And we'll tell clients, especially when they come in and they haven't been working with us or they didn't take our advice, like, what's your mileage? Oh, I don't know. We'll have them at a minimum go back and pull up their oil receipts from their mechanic when they got an oil change. And we can at least find out the total miles between the period and then take a percentage of it. Yeah.
And then make sure that the client or you as the client don't look up at the ceiling for the answer.
Yeah.
Because I've looked at my ceiling, there's nothing up there to look at. So
if there were numbers on my ceiling, my wife would definitely have it painted over anyway. So
so then as we go a little bit more here, it's when it comes to business again, at what stage is it important to have a cash flow management system? What's your thought there?
Yeah, my thought is from day one, if you're just starting off, right now is the best time to have a cash flow management system. If you've been in business for 10 years, right now is the best time to have a cash flow management system. It always works no matter what stage of the business you're in, because a proper system is going to adjust with you based on the size of your business. But I talked about in the beginning, this is one of the areas that I know business owners don't love to do, but it is super critical. We work a lot with gyms, so I do have fitness references every once in a while. And I tell people, look, let's say you see an attractive person walking down the street, and you assume, that person probably exercises. Well, guess what? That attractive person does not look good when they're actually working out. People make weird faces, they make weird body sounds. There's nothing attractive about it. Yet, obviously, the result is super sexy. It's the same with cash flow management. Not necessarily the sexiest part of business, but the result of doing it is very sexy.
Okay. Yes, definitely. The end result is always what looks good. And certainly the what happens in between there may not always look good, but and probably doesn't always look good, but getting to the end of that is what's really going to do it. So get it started right away, which once again, coming in and having someone like John or myself work with you to help you to develop that would be vitally important there. So then as we come in, what are some tips for business owners who perhaps feel overwhelmed by their financial situation, would you say?
It goes back to me of scheduling things. Usually, obviously, I don't know how other people always feel when they're overwhelmed. So this is coming from a place of how I feel when I'm overwhelmed. Usually it's because there are so many things I feel like I need to do, and I know that I can't get them all done today. So I really just want to go take a 15-minute nap, like there's so much to do. Oh my gosh, I should sleep. So for me, scheduling, especially this cash flow management task, can help a lot with overwhelm, because also the overwhelm can occur for us as business owners when bills are coming due, or maybe our revenues aren't as strong as we want them to be, or we're not quite on track to hit our goals. And so overwhelm also happens in those scenarios when money is related. So we recommend people, business owners specifically, take either a time once a week or twice a month to sit down and look at their money. Because if you break it up in these smaller chunks throughout the year, you can get it where you're spending 10 minutes or less every week on looking at your cash flow and managing your system. And then the rest of the time, you can focus on the stuff that your business needs you to, the stuff that you're really excited about. We have found by having a system like this, it really does help the business owner control a big portion of overwhelm, because whether some know it's the case and others don't realize it, But managing finances and thinking about the finances is a big stress factor, can be a big stress factor for most business owners.
Yeah. So how do us as the tax professionals and those helping the services, how do we come in and help them with this? What's our role in this for them?
So our role is to help them, let's give them the roadmap. So to say, hey, sit down and take 10 minutes every Friday to look at your finances. They'll be like, yeah, I can take 10 minutes. And the first time they'll sit down and they're going to be like, what the heck am I supposed to do? Okay, 10 minutes, what do I do? So we should be giving them the roadmap. For us, we use a system called Profit First. It's a cash flow management system. And why I wrote the derivative book, Profit First for Micro Gyms. I took the original concept and applied it to gym owners. And so that's the roadmap we help our clients use. The simple summary of the system is the envelope system that most of us have heard about. When a dollar comes into our business, that whole dollar is not ours. We have commitments, whether that's to, say, our landlord or to our team members, commitments maybe to our family that we're going to provide for our living expenses. And so all we're saying, just like with the envelope system, if this dollar comes in, I'm going to kind of categorize those specific dollars into separate buckets. So instead of using physical envelopes, we recommend using separate bank accounts. So maybe I have the system talks about specific envelopes that we recommend, or smaller plates, or bank accounts, whatever word you want to use. Owners have got to make sure they get themselves paid. A profit account, they should be giving themselves a profit distribution regularly. Your business is going to generate taxable income. You should be setting aside money for taxes. So, and then of course you have operating expenses. And you think about those obligations. So if a dollar comes in, I can kind of segregate that money into different categories. So now when I look at my operating expense account, I could start making business decisions based on the dollar amount that's in that account, not in the other commitments that I've made that will need to get paid down the road, but they just aren't due right now. And so I think it's our job to help our clients kind of understand a roadmap that works for them, so that when they take the time in those 10 minutes, they have clarity on what they actually should be doing in the 10 minutes.
Yes, help them to get that clarity, because that's vitally important. It's part of the whole picture, of course, in getting that clarity, that cash flow, setting aside for the taxes, as you mentioned. Then as we, as professionals, work to help you as a taxpayer to be prepared for the taxes there. So then as we review that, and we talked about feeling overwhelmed with their situation, but then helping them to do that by just sitting down for the few minutes, giving them the roadmap, then you as a taxpayer then following that roadmap, because often the challenge is just getting that 10 minutes.
It can be. It can be, because again, this is one of those things I don't want to do. So for me, I live by my schedule, and so if I scheduled it, I'm going to get it done, even if I don't necessarily want to get it done. It's a checklist. There's dopamine that can be released if I check some things off a list. I know not everybody lives by checklists or schedules. And so for those people who are in that boat, whatever you've done in the past to create the habit of doing things you don't necessarily want to do, try that approach first.
Yeah. Well, I take a look at it of, okay, I don't want to do this, but so let me do it first, so I have it done, and then move on to the next thing. That's usually where I start. It's just like the way I, growing up, when I used to eat. I says, well, this is what I don't like, so I'm gonna eat that first, so that's covered up by the good stuff later on.
Nice. Yeah.
And so that's kind of what I live by. Let's get the unpleasant thing done first. That way we finish off pleasantly and have a good, that way we're not going, oh my goodness, at the end of the day going, oh, let's get the pleasant things done first. So
yeah, that's a good strategy. I think I've heard, they call it like eat the frog. Is that what the concept is? Brian Tracy, I think, wrote a book called Eat the Frog, where he talked about doing your least desirable tasks very first thing. because no one wants to eat a frog. I don't
yeah.
know where the reference comes from. I still don't want to eat a frog ever.
Well, for myself, it's Brussels sprouts. So
Okay. Eat the Brussels sprouts.
I'll eat the Brussels sprouts first and then move on. So then how we've got them looking at the numbers, we've got them finally where they're kind of sitting down, and you as a business owner are looking at that, seeing where your cash flow is. So then how are they or the business owner to interpret these numbers as we take a look at this?
So there's a couple of different ways to approach it. One, the cash flow management system is we're just looking at cash balances. And really what the interpretation comes in when we look at the bills that are due and the cash that's sitting in our operating expense envelope. And so, if there's a discrepancy, like maybe we owe more in bills than what we have available, we need to interpret that as the business is telling you can't afford all your expenses, which is a message that most of us need to hear. Usually when we sit down with clients, we find that their 80 to 85% of their revenue is spent on operating expenses, when healthier businesses are probably in the 50 to 60% range or lower. But because they haven't put systems in place before, like they don't necessarily think about the fact that they're overspending on expenses. So that's one interpretation that can come up. And then we can look at, like, we're just interpreting the cash balance. Oh, there's X amount in my tax account. That feels pretty good. I think that should cover my tax burden at this point. Or there's an X dollar amount in my owner's pay account that is enough for me to live off of, or maybe not live off of. Either way, whatever it is, the interpretation is, well, what do I do to fix it? Or what do I do to improve it? And then the other thing when it comes to interpretation is probably at a minimum getting an accountant to help you understand how to interpret your profit and loss statement and balance sheets. And now maybe a few meetings with an accountant can help you see how they're looking at things, and you can take it from there. But usually I found, even if it's just let me help you get started and you run with it, it's a necessary meeting because they just don't even know enough where to start. Because with a profit and loss statement, like, you can look at it one way. I can look at it for the year. I can look at it for the month. I can also compare that month to last month. I can look at the year, but I can break it up into monthly columns. I mean, there's so many different ways you can run reports on the information. So many ways that I could see how it could be overwhelming for a business owner to be like, I don't even know where to start. So getting some advice on understanding where to start. And who knows, maybe you'll realize that having a professional involved always is going to help you interpret the numbers as your business continues to change, right? Because we're all in this hoping to grow. And the way I interpret my financials now as a startup might be different how I interpret it once I'm a mature business.
Yes. And with those financials, and as you mentioned from the start, that's why it's so important from my standpoint, and I believe even for you, would be, we need to make sure those financials are correct from the beginning.
Yeah.
Because things that need to be on the balance sheet end up on the profit and loss, and vice versa. And so that's practically, at least for me, a new client coming in. That's step one we got to do in the first place, is get everything into the right place so we actually can figure out what the numbers are.
Yeah, totally. I saying is kind of junk in, junk out. And again, another nutrition reference, health reference. I could eat 100 calories of Oreos or 100 calories of grapes. And I'm going to be a lot healthier by putting the grapes in my body versus the Oreos. I mean, to your point, we had a client one time came to us new, and we're looking at his financials, and we saw his payroll expense was getting booked as a negative liability on his balance sheet. What that means is, while the tax code allows him to write off his payroll expense, it's not showing up in a way on his tax return
Mm-hmm.
to reflect that it's an actual tax deduction.
Mm-hmm.
So he, for the last, like the 3 years prior to him working with us, had not claimed his payroll expenses. And
Oh
so
my.
he overpaid in taxes because the deduction's not showing up in the right spot for the tax professional. And a lot of tax professionals don't take the time to analyze the stuff that they've been given. And that's just simply because, like we talked about in the beginning, some of these softwares made it easy for him to enter the information, but he didn't enter it in the right way.
Mm-hmm.
And so we've seen scenarios like that. Luckily, we were able to amend things, but if he never found us, I mean, he could have gone on for years and years and years overpaying in taxes simply because his financials were not correct in the beginning.
And that leads to an area where it's come up in some education that I've done there, is that there's tax preparers, at least, and there's tax professionals. Where, at least for me, a tax preparer is someone who basically does what you just described. They just take the information and they just put it into the tax return.
Yeah.
Whereas a tax professional will come in and look at that, which is every time I get a profit and loss for a company that comes in, and that's all I do is their tax return and maybe a little of this out the little of this and that through. The first thing I look at is that, and I go, okay, this is my problem with this. Can you go and fix this? Or can you get this number correct? Because I can't file your tax return with the way these numbers are organized here, because it's going to show either you have too much income, which I've had that on numerous occasions. Because I know you got this, well, I'll just say PPP loans.
Right. Not taxable income.
Were put in on as income. And then payments on their building, on their commercial building, were put in as expenses. And I go and I explain to them, well, your expense is overinflated because this $1,000 a month payment you have on this building is not really an expense. And then you got to go through the whole explanation to them as to why it's not an expense. But anyway, which is what I explained very clearly to ones, and I'm sure you do that as well, why their building payment is not an expense. But anyway, we go in and I look at that very closely, and I just kind of note all the way across that I copy it first, and then I note on the copy and say, okay, we need this, and this all fixed here. And then I send it back with them. And then, because they like doing their own books and stuff, which is fine, but I can't do a tax return until these items are fixed. It's just,
right.
I can't.
Right.
And so that's where the professional is going to come in and question those things. And hopefully ones will come in, if they come to you new, they'll let you start working with them to fix those things on the books and help them. If they have something new come in, you'll be able to put the items in the correct place and just say, okay, when you put this payment in, this is how you put it in.
Yeah. And so, we call that the plug and chug mentality. It's not a super great tax strategy. And as you're saying that, I realize that maybe your audience has heard this from you in the past, but I really look at tax there's three categories in my mind.
Oh.
You have the DIYers, right? So they're buying the software, and I hope the software programmers programmed all the right questions in to ask you the right questions to make sure you're not missing anything. Usually they haven't, but they make it really convenient for you to file something. The next group up is you're paying a human being to use a tax software. So there are companies out there that have people dancing on the side of the street in costumes. Come, we'll prepare your taxes. And really, those people in those types of companies, they've only received software training. They don't necessarily have tax professional experience. And then you have what you refer to as the tax professionals. And I just hope people are choosing wisely when it comes to this, because as I mentioned, this is the largest lifetime expense that most of us will have. I don't think it's worth trying to save $100 when the outcome of using a professional who's going to be more expensive than the software versions or some of these software trained people. The return on investment for using a tax professional will pay dividends in your lifetime and just better tax savings.
Especially one that's like yourself or myself, who wants to not just be there from January through April 15th or May 15th, we could say this last year, just be here through that seasonal, but be there in the long run. Be there throughout the year. Be there in the middle of the year so that we can do a review, so we can help you and say, hey, this is an adjustment you can make for next year. And this year, like, was unlike any other year in a sense, because they got those advanced child tax credit payments. I don't know how many questions you got about that, but I've gotten countless questions about those and trying to help.
Exactly, because shocker, right? The government kind of rolled it out very haphazardly. And I have clients who are making crazy amounts of money who are getting payments. And it's like, you're gonna have to pay it back. I don't have any idea why they're sending you this money.
Mm-hmm.
Don't even, like, anyways. I don't know if this analogy works quite yet. But it's kind of like the difference of reading a journal versus writing a journal.
Mm-hmm.
Like, if you are just using a tax professional to file your taxes during tax time, it's like looking back at history and saying, oh, that's nice, that's what happened, versus sitting down and writing out, this is what I want my future to look like. A tax professional can help you with that, because we know that people's lives actually continue on throughout the year, and they don't just happen during tax season.
Yes. Mm-hmm.
So what's happening outside of tax season for these business owners? Most of that stuff, I mean, when money exchanges hands, Uncle Sam's got a tax roll to try to get his grubby little fingers on it.
Mm-hmm.
So you kind of want a professional involved all the steps of the way, so you can ask them questions throughout the year, like, hey, I'm thinking about doing this, or I'm about to do this.
Mm-hmm.
Is there anything I should know from a tax standpoint? Usually there is.
Yes, there is a lot, and certainly so much more than we can consider. We've just considered I always say, whenever I have these conversations, we've kind of just scratched the surface of it there, which is why it's so important, and which is why I do this program, which is why I invite ones to visit my past programs, or of course to contact you, John, there at Insight Tax for questions. Of course, I'm always available for various questions here at success@cashtracksfinancial.com. You give me a call. It's 844-394-4287. We can have a free mutual exploration session just to learn a little bit about you and your business, and to help you implement some strategies, get the cash flow system going so you can do more. And what's great is that people all over the country need to be helped, which is what we like to reach out and do, is to help you all if you're out there. So certainly come visit us again here on the Tax Answers Advisor with Marcelino Dodge on the Voice America Business Channel.